Well, it's that time. It's time for our chart of the day. And today we're looking at Forex markets, the U.S. dollar versus the Japanese yen. We've seen a massive gap, really, between benchmark yields and Japanese and U.S. dollar debt. And what we've really noticed is just a massive rise over the last month of the U.S. to JPY. We really saw a peak actually this morning at around 135 Japanese yen to one U.S. dollar. It's actually let up a little bit intraday so far, but either way you cut or slice it, Akiko, you've seen a lot of interest rate differentials as the Bank of Japan remains essentially stuck where it's at right now, and the Fed aggressively raises interest rates to get ahead of inflation. That's a big reason for what the movement we've seen in this space.
The Japanese yen at a 24-year low. I mean, it's the worst performing major currency. And we were talking about this off camera today because, you know, in many ways, we've seen the governor of the Bank of Japan face a lot of pressure to step in. I mean, the expectation seems to be until it reaches 140, he won't. But in many ways, this is kind of out of his control because it is about the Fed. It's not necessarily about what the BOJ does. Yeah, and you know what's really interesting is that we were hearing so much before the pandemic about, is the Federal Reserve going to get stuck in a Bank of Japan-like situation where they can never raise interest rates? Well, obviously the unprecedented inflation that we're seeing now making that a very different story. And in fact, if anything, this spells more trouble for the Bank of Japan, which has essentially been forced into doing more bond buying, more puts for the stock market spills in their domestic markets, just to try to keep not only their currency afloat, but really any sort of economic activity afloat. And it's been interesting to see the impact on some of these major Japanese companies, the car makers like Toyota, because this actually helps them, right? It inflates the value of the profits abroad. So while they face a lot of headwinds back at home, this is never good to have, 134 to the dollar, right. but in some ways, it's given them a little extra padding. It gives those with U.S. dollars more purchasing power, but at the same time, you see what it's done to American corporates like Microsoft, dramatically downgrading their growth expectations over the next few quarters because of the conversion rates. That hurts. Yeah, 140. Will it go to 140 is the question. Yeah, down 15% this year so far. We'll continue to watch that. But